Hello everyone, welcome back to my channel. So in this video I am going to explain about the production budget. So we will see what is the meaning of production budget and how we will go for preparing the production budget, what are its requirement. So the meaning of production budget. So production budget, it is a plan or it is an estimation of what is the quantity of products to be produced over a particular time period. So means we'll go for preparing a plan or we'll go for making the estimation for a particular time period what is the number of products we have to produce. That is called as production budget. And the production budget will be based on the sales forecast, means how many products to be sold. If you know what is the sales, then only you can go for producing the products based on the sales forecast what you have to sell in the future. Based on that, the company will go for preparing the production budget. So the production budget is entirely depend on the sales budget. So now we will see what is the equation for preparing the production budget. So the production budget is equals to sales budget or sales forecast plus planned inventory to be maintained in the end minus inventory in the beginning. Means first we have to go for making the sales estimation. For that sales estimation we have to go for adding the inventory which is having at the end of the time period. From that total amount, if you deduct inventory at the beginning time period, then you will get the total number of units to be produced for that particular time period. With this equation we will go for preparing the production budget. Explaining the production budget with an illustration. So here it is the problem. The following information has been made available from the accounting records of payments of Precision Tools Limited for the last 6 months of 2019 and of only sales for January 2020 in respect of fish plates X produced by it. Means they are giving the 6 months information in this problem, that is from July to December of 2019 and sales of January 2020. So first point they are giving is the units to be sold at different months, that is they are giving the sales estimation, the units to be sold, that is the major requirement for preparing the production budget for the month of July, August, September, October, November, December and January 2020. They are giving the sales estimates. And the second point they are saying that there will be no work in progress at the end of any month. Means there is no work in progress, all are finished goods itself, no work in progress will be present at any end of the month. And the third point is finished goods equal to half of the sales for the next month will be in the stock at the end of every month including June 2019. Means for in the information they are not directly giving the opening and closing stock, so they are saying that the finished goods will be equal to half of the sales for the next month. Means whatever the estimated sales will be having for next month, half of those sales will become the finished goods for this month. That is the third point. And the fourth point says that budgeted production and production cost for the year ending December 2019 are given below. So production units is 44,000, direct materials per unit is 10 rupees, direct wages per unit is 4 rupees and total factory overheads to be product is 88,000. So this is the information what they have given in the problem. So with this information they are asking you to prepare production budget for the last 6 months of 2019 and production cost budget for the same period. So let us see how to prepare production budget with this information. First we will go for seeing how to prepare the production budget. So with the given information we have to go for preparing the production budget. For preparing production budget, first and foremost thing you require is estimated sales. So here they are asking you to prepare the production budget for the last 6 months. So that is from July to December they are asking you to prepare the production budget. So now to prepare production budget, first you should have the estimated sales for all these months. So in the problem they have directly given the estimated sales for each and every month. So we'll go for writing first estimated sales. The first item required for calculating or preparing production budget is estimated sales. So every month we'll go for having the estimated sales. So for the month of July, so we are having 2200 units as estimated sales and for August also 2200, and next for September 3400, and for October 3800, and next for November 5000, and for December we are having 4600 as the estimated sales. And now the total of estimated sales will become 21,200. So that is the first step what we are required to prepare the production budget. So once the product estimated sales has been done, then for this you should go for adding up of, that is whatever the estimated sales you are having, for that estimated sales you should go for adding what is the closing stock, that is at the end of budgeted period whatever the stock you are having, that should be added, that is closing stock, or we can say it as the stock at the end period, so closing stock. So in the problem they are not directly given the closing stock, they are saying that the finished goods equal to half of the sales for the next month, means whatever the sales we are having for the next month, half of next month's sales will become the closing stock for this month. That is the, they are saying in the third point, they are saying that so finished goods equal to half of the sales for the next month will be stock at the end of the every month, so including June. So like that, so that half of the finished goods will consider here as the closing stock. So next month half will become the closing stock for this month. So here we are having 2200 as the sales for the next month. So half of this will become the closing stock for previous month. So 2200 means half of it will become 1100. That will become the closing stock for the month of July. Next, for the month of September we are having 3400 as the sales. So half of this will become closing stock for the month of August. So that is 1700, that is half of 3400. And next 3800, half of this become the closing stock here, that is 1900. Next, for the month of October, November sales is 5000, half of this will become the closing stock for October, that is half of 5000 is 2500. And next, so half of this, that is 4600, half of this means 2300 will become closing stock. But for the December we will not having a further month, but in the problem they have given the next month sales also, that is after December they are again giving on January 2020 they are giving sales 4000 units. So next month sales is available, so half of those sales, that is 4000, half of it means 2000, it will become the closing stock for December month. So like that we'll go for considering the closing stock. So it means the condition they are giving here is finished goods will be equal to half of the sales for the next month. So whatever the sales next month we are having, half of that sales will become the closing stock for the previous month. So we got the closing stock, and total of closing stock will become 11,500. So now we have to make the addition, that is estimated sales will be, closing stock will be added to the estimated sales. So now for the month of July, 2200 plus 1100, it will become 3300. And next 2200 plus 1700, 3900. Next 3400 plus 1900, 5300. Next 3800 plus 2500, 6300. So 7300. So 6600, and total will become 32,700. So now may we add the made. So now whatever the total you got, from this total you should go for deducting the opening stock. So whatever the opening stock will be having, that opening stock will be deducted from the this amount, means the stock which is present at the beginning of inventory. So it can be read as the opening stock or stock at the beginning. So now in this problem again they have not given any information related to opening stock also, with the condition which is given in the third point itself, that is half of the finished goods for next month will be the stock finished, that we have considered as the closing stock. Now whatever the total estimated sales we are having, out of these sales half we will consider as the opening stock. Means for the month of July we are having 2200 as the estimated sales. From the out of these sales half will be considered as the opening stock, that is 1100. And next month also 2200, half of this again 1100. So 3400, so half of this 1700. So 3800, 1900. So 5000, 2500. So 4600, 2300. Means here they have not given the information related to opening stock. So with the consideration of third point, we have calculated the closing stock. By considering the same point, we'll go for taking opening stock as half of the estimated sales. Whatever the sales you are having, from those sales half will be considered as the opening stock, and the total will become 10,600. So now after deducting opening stock from this total amount, whatever the units you will get, that will be called as the required production units. That is 3300 minus 1100, you will get 2200. 3900 minus 1100, 2800. 5300 minus 1700, 3600. 6300 minus 1900, 4400. So 7300 minus 2500 will get 4800. So 6600 minus 2300 will get 4300, and the total 32700 minus 10600 will get 22100. So now whatever the total units you got, that is the total production whatever you required. So this is the first point. They have asked you to prepare production budget for the 6 months. So now we have prepared the production budget, and again they are also asking you to prepare production cost budget. That means whatever the units you have calculated, that is number of units the production required, that we are calling it as a production budget. When these units are multiplied with the per unit rate of materials, then you will get the total cost, that will be called as the production cost. So here they have given different types of information related to direct materials, wages and factory overheads. So we have to prepare again separate budget which is called as the production cost budget. So otherwise just we will, if they have given only single rate per unit, that in such situations if you multiply production with the rate per unit, you will directly get the total cost. But here they are separately given direct materials, wages and overheads. So we have to prepare a separate budget for the production cost. So the format for production cost budget is also prepared in a similar way, that is whatever the information related to the materials. So now what the required production we have calculated in units. Now we have to go for calculating in terms of the cost, that is what is the total cost required for us. So direct materials they are given 10 rupees per unit, wages we have given 4 rupees per unit, but they have not given factory overheads directly the amount. So we have to go for calculating the factory overheads. So how we'll go for calculating factory overheads means, so they have given the factory overheads apportioned to product 88,000 rupees, and they have given the production units. So if you divide these two, you will get the factory overhead, that is rupees 2 per unit. So with these rates, so means whatever the production required you have calculated, this should be multiplied with these rates, that is 2200 into 10, 2200 into 4, 2200 into 2, you will get the, for the month of July you will get the total cost. So like that whatever the per unit information they have given cost, that should be multiplied with the production required. So you will get the total cost. So for the month of July we are having production required is 2200 units, that should be multiplied with 10. So then you will get 22,000. So next 2200 with the wages of rupees 4, so you will get 8,800. So next, so for 2200 into 2, you will get 4,400. So now the total cost for the month of July will be 22,000 plus 8,800 plus 4,400. You will get 35,200. So like that we'll go for calculating the total cost for each and every month. Now for the month of August, 2800 into 10, 28,000. 2800 into 4, 11,200. So 2800 into 2, 5,600. And the total 44,800. And next for the month of September. So the total production required is 3,600. So 3,600 into 10, 36,000. 3,600 into 4, 14,400. So 3,600 into 2, 7,200. So total you will get 57,600. Next for the month of October. So total production required is 4,400. So into 10, 44,000. So 4,400 into 4, 17,600. 4,400 into 2, 8,800. So the total will become 70,400. So next for the month of November, you require total production is 4,800 units. So 4,800 into 10 rupees, 48,000. So 4,800 into 4, 19,200. 4,800 into 2, 9,600. So total 76,800. So for the month of December, you will get total production is 4,300. So 4,300 into 10, 43,000. So 4,300 into 4, 17,200. 4,300 into 2, 8,600. Total 68,800. So now you will go for making the total of all the amounts. So that is total of direct materials, that is 22 plus 28 plus 36 plus 44 plus 48 plus 43,000. You will get 2,21,000. And next wages, 8,800 plus 11,200 plus 14,400 plus 17,600 plus 19,200 plus 17,200. You will get 88,400. So next factory overheads, 4,400 plus 5,600 plus 7,200 plus 8,800 plus 9,600 plus 8,600. So you'll get 44,200. And the total will be 3,53,600. So this is how you'll go for preparing the production budget and production cost budget.